traders say they expect rates to pick up today as local investors are expected to reinvest the OMO maturities. Seun Ameye is a fixed income dealer at Citi Nigeria. He joins me now for more on the fixed income and FX markets in Nigeria. Thank you so much for joining me on the market on the show today, and Seun. And I'd like to get your take on how the market has played out this week.
Hey, thank you for having me. As you all know, we had a T-bill auction yesterday, and we did see huge demand from investors, especially on the 350 paper. Bid to cover was over 4 times, and what we're witnessing today is a spill of that demand into the secondary market as we begin trading. Today, we had about 150 billion of other maturities, and the central bank has issued quadruple. We are waiting for the results of that. But nevertheless, overnight rates are down from about 16 to 3% because of the liquidity in the money market. And with this, the continued investor appetite for bonds, the rally we've been seeing in bonds for the past 1.5 weeks seems to continue into today. 3-year paper is trading about 5%. 10-year paper is trading about 8.35%. 30-year paper about 10, and 20-year paper trading about 10, and 30-year trading at 10.9%. So that's what we've been seeing in the market, just the continuation of what we've been seeing in the past 1.5 weeks. FX remain quiet, bid offer still about 35, 36 levels.
What about the liquidity situation in the market, and also are we seeing local investors and reinvesting the OMO maturities?
Yeah, we've seen overnight rates drop. Now we have overnight rates about 3 to 4%. We went as high as 10%. So that's because of the home maturities we saw. We are seeing today, though the central bank is still offering them one. We are waiting to see the result. Maybe after the result of the OMO, we have a better sense of the amount of cash that remains in the money market. We're still seeing investors buying CDs and bonds. So really, it's still liquid and for now, for today, and we're waiting on next developments as we approach the end of the week and next week.
What about the unmet demand from Wednesday's primary market auction? Are we seeing investors filling that up?
Yes, precisely. And we've seen them trying to buy short end of bonds, 1 year to 3 year bonds in the secondary market at the moment. Really. So from 2021 to 2023, 2024, that's what we've seen investors buying. The yield on those have dropped about 20 bps on a day-on-day basis, and it's from look at it today. So really, most private investors cannot buy more in the secondary market or in the primary market. So we're not surprised that we're seeing the demand at the short end of the bond curve.
What about activity in the bond space?
Well, yeah, generally it follows a continuation of what we've been seeing in the past 1.5 weeks, really. Still bid. Most investors want to buy bonds, besides the short end and the longer end, that is the 30-year bond, really. So nothing has changed, really. Investors, we have a lot of demand and trying to chase the few bonds that we have in the secondary market. One thing important, though, is that we've been looking out for the Q3 bond calendar to get a sense of the demand that the PMO will likely bring to market in Q3. And that means.
All right, but looking at the CBN's strategy into the markets now, I'd like to get what your expectations are going into the second half of the year.
Well, I expect same of same, really. I don't expect any startling changes to what the central bank has been doing. They have targeted credit sectors, focus on the sectors that they think are critical to the recovery of the economy. And also, it's very important that we wait for the data. And the contention is, are we going to see a V-shaped recovery or are we going to see a W-shaped recovery? Depending on the data that rolls in, we may the central bank may need to be more accommodative, or if the best happens like we hope, their activity may pick up, and that will inform the way they conduct monetary policy going forward.
All right, but looking at the FX reserves as well, though, what are the expectations for the reserve movement?
So that's primarily on the back of oil prices. As we speak, oil prices are higher than our budget benchmark, and so as you see us retaining this level or inching up slightly higher if we continue to maintain this level of oil prices. Because
all right, now we saw the MPC cut rates at the last meeting, and we're expecting another meeting this month. I'd like to get what your expectations are and your outlook for monetary policy in the short term.
Well, the range of options for me is whether they hold the rates or they get more accommodative. And like I said earlier, also depends on the data that comes in. Are we going to see a second wave of COVID? Nigeria is still battling with the first phase, and we have not even taken care that come to the NCDC. So it really depends on a whole lot of factors, and so data dependent. But what I think is that going forward, I don't think will change from the accommodation phase of monetary policy that we've seen in the past 1.5 months or so.